Hey, good morning. Just wanted to do a video on Cardano, ADA. Similar setup to Ripple that I covered yesterday. Um, I think I might even like this one better. Haven't fully decided that yet, but let me go over the trade and why I think it's um, worth taking, at least in my opinion. And everybody has to say it, but this is not financial advice. But anyway, here's what I'm looking at. So the recent lows here, right around the 198, um, between 196 and 198, have held, meaning they've touched support, reacted, came back, tested support again, held, came down, attempted to break down, and got rejected. This is the key part. Um, Nothing's a guarantee, of course, but this is a sign that I think is bullish. When you get to a level that's good, decent support, and we're going to back out to the daily in a second here, but I just want to go over the concept of this trade and why I think it's worth it. So holding support obviously is good, but when you try to crack support and get through it and then are swiftly rejected, that to me is bullish. And then you can see it held again here, even when it came back down. So if we get another test into this area, I will most likely be going long. And the reason is because you don't have to, it's just such a clear and defined risk to reward trade to me. If we back out here, let me just go out to the 2 hour here. If we back out, you can see that this 255 to 257 area is resistance. I mean, we have small resistance up here, but it's not that big of resistance. So holding here could end up resulting in a move up to, let's say, this 257 level, at least to start with. And then let's just go out to the 1 day, the daily. If you look at the daily here, we don't want to hold the trade much past this 186. You can see over here the price. So right between 185 and 186, which is just below this big low that was made back here. Because if it gets below there, there's not, I don't want to say there's no support, there is, but, on the daily, there's not much support until way down here at this 107 area. So, you can exit the trade if it doesn't work, and you have a commitment to get out of the trade at around 186. Then you really only have about 10 cents of risk, call it 12 cents, with the potential to go up to, well, first this 255 to 60 area I just talked about, and then, possibly up to the highs here. Again, the other thing is, if you look at the Fibonacci, we've basically come back. Here's the 50% retracement. So we went up and then we've retraced all the way down here to around the 50%. It's in between the 50 and the 68% retracement. But the other reason why I like not holding the trade below here is because if you get below the 68, if you're looking at this as kind of a pullback and then another rally, usually they don't end up working if you get really low. In other words, if you kind of retrace the whole move, then it's not really a pullback type trade anymore. So there's a couple reasons why that's a good area. So buying this area after this little failure here, where it ripped back up, and using Bitcoin's weakness, because a lot of people are sort of exiting other coins based on Bitcoin weakness. So if that stabilizes, or even goes a little bit lower, but Cardano can hold this area we talked about, I think it's a great reward to risk. So again, just my opinion, but I just wanted to let everybody know. It seems like it's a trade that I that I like taking. So just my opinion, guys, but that's what I'm looking at, and hopefully it's helpful.